Hello and welcome back to Coinscrum's Meet the Founders series. I'm thrilled to be joined today by Guilhem Chaumont, co-founder and CEO at FlowDesk. Hi Guilhem, how are you doing?
Good, thank you. How are you?
I'm very good, thank you. You've had just some news out this week, which we'll come on to soon. So I congratulate you on that in advance, and we'll talk about the new regulatory authorization that you've just received in France soon. But before we kick off and find out a little bit more about FlowDesk, your team, and what it is you're developing there, we'd just like to ask our founders a bit about their backgrounds, what they were doing before they came into the world of crypto and blockchain, and what got you into this space.
Okay, yeah, well, essentially, I was a rates derivatives trader back in 2017. Very short career, about 1 year and a half. And I discovered digital assets, I think it was around March, end of March, and Ethereum was like skyrocketing from like $40 to $50. And I thought, okay, this is pretty interesting. Eventually, I found out the overall market cap was in the 25 billion area at that time. And I thought, yeah, this sounds a lot undervalued versus the potential, although at that time I didn't have much sense of what the potential of crypto was. And yeah, I decided to invest, very tiny amounts, which eventually became bigger because the market cap was indeed quite small relative to what it is now. And that's how I got interested by it.
Excellent. And what about the rest of your team that you eventually kind of joined forces with? And I know you were working on a project before you formed FlowDesk. So do you just want to tell us about some of your co-founders and a little bit about perhaps what that project was?
Yeah. So essentially, we have background mostly from the financial industry, and prior to FlowDesk, we built a blockchain development firm, and we did lots of development with regards to privacy-centric technologies in the blockchain field. We think it's very important, not for the bad reasons, obviously, but more for the good reasons. And privacy is a huge topic right now. GDPR, everything we can think about. So yeah, we did a few innovative things in that area, and eventually we came back to our core activity, which is pure trading, and that's how we eventually built FlowDesk around 1 year ago.
Right. Okay. So it was that work that you were doing on the trading side which influenced what has become FlowDesk now. So what was it you were doing first on the trading side of things, and then maybe tell us a little bit how that evolved into what FlowDesk has become?
Yeah. So essentially, at first, we built a data aggregation infrastructure focused, on low latency and streaming live data. On top of that, we added a trade execution for around 45 exchanges. And the first product we built was market making. And we found out that, there was a huge lack of liquidity, especially for the lower market cap, although it's a general problem in crypto. So we thought we would focus on that with a quite innovative offer, which we called market making as a service, where we basically just provide the technology and the algorithm for clients to be able to build their own liquidity to some extent.
Right. Okay. Yeah, that makes a lot of sense, especially with I guess we saw that first during the whole ICO boom, an explosion of new crypto assets coming into the market, and liquidity obviously being a key problem. I guess we'll talk about that soon as well, how the kind of general broader ecosystem has changed, and now with decentralized exchanges and DeFi in general, the difference that's made to people issuing tokens, and how they can maybe get access to liquidity. But what do you think in those, while you were experimenting yourselves on a more personal basis, what were the biggest lessons you learned about kind of this still very immature, I guess, but rapidly maturing trading ecosystem with all the different exchanges and the fragmentation of the whole kind of ecosystem?
I think we definitely learned quite a few lessons. The first one is that this is a very complex topic. We are at the edge of a whole bunch of technologies, and I think it's been a long time we haven't seen such a complex topic, because we have finance on one side, obviously we have the blockchain technology, and we have all the related IT technologies. So yeah, we found out it was much more difficult than we thought, and especially because all the exchanges are spread around the world and that kind of things. The other things that we learned is that things can change very, very fast. In 4 years, we've seen the ICO boom with almost zero fundamentals, and now we are up to the point where we have a DeFi, we have layer 2 solution which are enabling new scalability. So it's very important to keep up with what is the latest developments. Right now, obviously, it's towards more decentralized finance, but who knows what's going to be in 1 year, and being agile is definitely the most important thing, in my opinion.
Yeah, no, absolutely. And you mentioned before, obviously, one of the things you did just to kind of launch your own market making capacity was, we've got this big fragmentation. You said you connected to 45 exchanges. Where are we at in sort of kind of the move from this, what was a very retail focused trading architecture, to now you being able to start offering out some of that technology and the connectivity systems that you've developed to customers? How do you think that compares, and where are we at in terms of versus traditional markets? Because that evolution happened a long time ago, over a number of years in traditional markets. How fast have we caught up? How far are we away from really kind of having a very similar kind of structure?
Well, it's a bit hard to say, especially since I wasn't there during the first move. But what I can say is that from my perspective, it seems we are seeing more or less the same pattern, except that it's happening at like 2x, 3x the speed of what it did back in the 90s. Definitely, we had a very retail market focused during the last years, and we've seen obviously a shift in 2020 and in 2021. From our end, what we can see is that we are starting to have a significant demand from more sophisticated institutional investors, not obviously to have access to market making as a service solutions, but just to have execution services, be able, to spread trades around the world with the lowest latency and the most plug and play solution. And I think it's just the beginning, of the trend. What is important to note is that it's not like we're going to see a huge shift from retail market to institutionalized market. Retail will always play a significant role in crypto finance, which I think is a good thing. It's why crypto finance is here. It's to give back power a bit to everyone. That's one of the good things. But indeed, throughout the years, I think it's going to take more or less a decade to get there. We're going to see all the sophisticated investors enter the space, and that's obviously what we are most excited about.
Okay, so tell us a bit more about your current products that are live in the market. What the typical customer profile is that you're engaging with, maybe from in the year or so up until where we are today, and now what you're seeing and what demand you're seeing from a new type of customer.
So essentially, the sweet spot for us is obviously we are a B2B firm. We only work with businesses, and we've been working with token issuers which had market caps ranging from $1 million to a few $100 million. Obviously, as the market is growing, so the market caps are growing, and we are seeing demands from much bigger projects, especially to tackle liquidity in the new markets, which are either decentralized markets, but also very local centralized markets in whatever the countries you can think of. So that's right now the main product that we have, which is basically offering a plug and play solution where we can basically trigger liquidity in a few hours on a various range of markets and pairs. That's our offer. And obviously, with the new regulatory framework that is being put in place in France and that we have applied to, we are able to offer a new range of services, which range from custody, brokerage, and soon much more to come. Okay,
so yeah, see how that's kind of coming together as that one-stop shop solution, which I guess is going to be in ever greater demand as you're seeing more traditional, maybe FX brokers coming into the space, and for them to have to come in and manage, or rebuild all of this connectivity across so many different venues would be a huge challenge. So can definitely see how that demand is going to build. You just mentioned one thing there, which I mentioned at the top as well. You've just received your digital asset service provider license out of France. First, can you tell us about what that process was like in that application? Because regulation has been a hot topic recently. Regulators are finally catching up with the industry and putting in frameworks. I know the European Union has been working hard on a kind of a cohesive framework for the region in general. But how did you find the process in France, and how do you think that compares to other countries that are trying to kind of get their heads around this?
Well, yeah, obviously it's a huge milestone for us, and we are extremely excited about that news. And the team has done a terrific work. First of all, it's a long and quite difficult process in terms of documents and everything you need to bring up, and for the good reasons, not the bad ones. It's compliance, all these regulatory framework are here for the good reasons. We need more regulation. We still have today way too much scam, and a whole bunch of issues. It's definitely one of the most difficult frameworks to do this in France. At FlowDesk, we have chosen to incorporate in France, not to have any subsidiary anywhere else in the world. Maybe that will come at some point because we are extending our activities, but our vision from day one was to be compliant and to have the highest level of regulatory, procedures and that kind of things. So, it was just, a logic step. I'm not going to say it was easy because, again, the process is complex, but having in mind from day one that we wanted to have the cleanest procedures and, that really at the core of our DNA made the process maybe a bit easier. My personal opinion is that I think France is moving in the right direction, along with a few other countries in Europe. I think Germany is doing also interesting things. These two regulations will definitely have some impact on the overall EU regulation. So that's also one of the reasons we want it to be regulated in France, because it will allow us some leverage when obviously the whole European Union gets more regulated. And yeah, I think it's heading in the good direction. Try to give a bit more bandwidth to the new actors and the new startup, not to have too many constraints, but obviously making sure that with regards to KYB, KYT, anti-money laundering policy, we are completely set up and we are working in the right manner.
Yeah, well, just this week, I guess one of the biggest pieces of news this week that we're recording, there's been a lot of news in the media around the FCA in the UK restricting Binance's operations in the UK. They felt that they clearly didn't have the right licensing to offer some of the products that they were offering. And the perception in the media has been that maybe this is kind of, and with other kind of regulatory news going on across the globe, that this is, first signs of regulators really coming in and trying to tighten the noose. Do you think that firms such as FlowDesk and others that have entered the market more recently and have kind of started from the beginning, looking at the full regulatory side of things and to make sure they're setting themselves up as legitimately as possible, are going to benefit from this, where some of the service providers that have been around from the earlier days in the industry and are maybe suffering from some of the legacy kind of issues and perceptions from regulators in terms of how their operations might have kind of been run earlier on. Do you think this creates an opportunity for the newer entrants in the market to kind of start with a clean slate?
Yeah, it definitely does. As you said, I mean, when you set up a company and you start having legacies, especially when it comes to the compliance side of things, it can be a real pain. And obviously, we've seen this new trend of firms which started by the end of 2019, which had compliance in mind and compliant at the core of their value, build a new interesting offer, which is obviously much more restricted from day one in the range of services, in the range of the things we can do. But at the same time, it's a good thing, because you cannot offer 125x leverage to retail clients, and I mean it's a good thing. It makes things simpler. It gives us a framework to work very comfortably. At the same time, on the other hand, our clients are much more comfortable, working with a firm which know what it does and which is being regulated. So overall, I think it's part of the process. It creates opportunities, it creates threats, obviously, and some weaknesses. But overall, I think this is for the better.
Yeah, and firms such as yours can't exist in complete isolation. Concerns around, especially when you're directly responsible for clients' assets, both on the crypto asset side, on the security side, on the banking rails and the payment rails on the fiat side. Banking, as everyone who's worked for any time in this industry, getting banking services has been a challenge for forever. How, again, well, partly in terms of the regulatory licensing, but in general, how are things opening up, do you sense, on that side with banking relationships, and how are you managing your crypto asset custody and security?
So with regards to the fiat components, it's still difficult, but it's being much easier than what it was, let's say, 2 years ago. On our end, we are working with partners in France and other countries in Europe, particularly Germany and the UK. So I think we are heading towards the right direction, and it's only a matter of time, until things are cleared out for the fiat parts. For the custody, it's more or less the same issue. It has been a very complex topic, but mostly for technical reasons. Right now, we are seeing new technology like MPC, new custodians providing some very interesting solutions. Obviously, I'm thinking about Ledger here in France, which have a complete suite dedicated for that, and that is really excellent. So again, it's really a matter of time and a matter of capital and resources. We've seen huge investments this year and the last in that topic, the funding rounds. So I think more or less same time frame, 2 years from now, we will have a complete framework to work with fiat, work with crypto within the same infrastructure, and obviously FlowDesk is going to be a part of it.
Mm-hmm. And what are you finding the reaction and responses from your kind of more institutional grade clients around how this is developing? Is it something they're starting to get much more comfortable with? Or do you sense there's still some barriers that need to be overcome before, maybe that holding some of those guys back?
There are definitely some barriers. I mean, they are comfortable, working on products and assets that they know. And we are more or less at the stage where they know Bitcoin, they know Ethereum, they know futures, they want to enter basis trades. They are fine working with the spot markets, but obviously, there is much more in crypto. There is the old DeFi. There is the way perpetuals works in the futures markets, and there are a whole bunch of other coins, other very, very interesting coins. And these products and coins are still out of their scope. So it's again, for me, it's a matter of time because the ball has been thrown, and now they are on the topic. And just like we did, they will need maybe 1, 2 years, 3 years to catch up, and that will more or less happen at the same time that the regulation is also catching up and is also setting up the right framework. So yeah, I'm very confident to what's going to happen. How the cycle of crypto work, and this is something we should not look at. But yeah, more or less the fundamentals makes me very bullish about what's going to happen next.
Yeah. We can't have a conversation about market infrastructure and trading in crypto and not talk about DeFi. What's your take on everything we've seen over the last 18 months or so? How are you engaging in those markets? Is it something that you're actively engaging with now, or is something that's you're researching and looking to bring in further down the line?
So no, this is definitely something we are engaged. Earlier I was saying that we need to be agile, and this is exactly what we need. When we started to build our infrastructure, DeFi was almost zero, and very quickly we realized it had a lot of potential. So as of today, on our end, we are aggregating the data, which plays a significant role in pricing the index of prices we trade on, because we have significant pools on exchanges like Uniswap, QuickSwap on the layer 2, PancakeSwap, obviously. So for the data aggregation, it's absolutely mandatory. And for the trade execution, this is also something we are working with very regularly, harmonizing the prices between the decentralized and the centralized exchange. My point is that although we've seen, very, very interesting things in the DeFi space, I think it will take some time, to have a potential switch between centralized and decentralized finance. And it would be a lie to say that tomorrow everything is going to be decentralized. We are going to have a bit of centralization in the decentralization, and we are going to have a bit of decentralization in the centralization. The way the DAO work, the concentration of token and voting rights. It's not because it's decentralized from a technical perspective that it is in terms of governance. So that's why it's very important to keep, these two things in parallel, to work in these two things, to basically get the best of both worlds, to create a new ecosystem that will be much more healthy for the market participants.
Yeah, I've sensed quite often that people put too much kind of emphasis on this whole idea of things being completely trustless, and whether that's kind of a step too far, or if it's actually what the market really wants, or is it a case of that we can build systems that just require less trust, and we can meet somewhere in the middle. So I guess that opinion that you just articulated there kind of ties in with that, and maybe there needs to be a bit of give and take on both sides, and we'll end up with a sweet spot somewhere in the middle. So it has been a fascinating year all round within the industry. Obviously exciting if you're trading and investing, but just as exciting if you're more interested in the pure technology side of things. There's so much innovation going on. Looking at the industry overall in a holistic manner, what do you think the single one or two biggest challenges are that the industry could do well to work together on overcoming, so that it makes the industry as a whole stronger rather than any individual company or component within the industry?
So I think the biggest challenge, and this is very subjective from what we see here at FlowDesk, but obviously it's the scalability. We need much more scalability, and although we could have huge doubts, in 2017, I think these doubts have been cleared out when you see solution like Polygon and the TVL that is locked in the Uniswap exchange on Polygon, which is QuickSwap. It's making me, very bullish about what's going to happen in terms of scalability. And we need that scalability, obviously, to lower the transaction fee, improve the speed, to allow a much wider range of smart contracts. Today you definitely don't want to run a smart contracts on a $10 notional on the Ethereum mainnet. So that's why you need, these two layers, these layers to come. The next thing that I think is very particularly challenging for the whole industry is the derivative side of things. Derivatives are mandatory to build healthy financial markets. We're not gonna go through that topic, but it's obvious. And crypto finance is very critical because derivatives need some centralization, especially for the clearing parts. And this is something that we need to replicate on the decentralized parts. And that is definitely a huge challenge in addition to the regulation side of things, because as you know, and you rightly pointed out, regulators are a bit afraid to derivatives, especially when they are used by retail traders. So I think this is one of the biggest challenges that we will have to overcome, and we'll have to do that together. But again, the ball is thrown, the trading volumes are there, the people are getting their interest, institutional corporate investors are into it. So it's not that the battle is won, but at least we are putting the right efforts to winning it.
Yeah, and I guess the world of DeFi operates as a public sandbox, and we see stress testing happen in real time. And although if people have long positions, they might not appreciate some of these sudden and sharp sell-offs. But it has been a good stress test on the ecosystem, especially with some of these technologies that are experimenting with margin-based models, and these have held up quite well. Some of the programmatic stable coins have held up well, and these things have worked. So, I guess it makes things slightly scary, but it also acts as a useful barometer for how well the industry is developing as a whole. But as you say, probably still more work to be done over time, but the signs are positive and good. Before we finish up, again, looking at a positive future for everyone, putting their time and effort into building things. What's on your radar technology-wise or broadly within the industry that's exciting you most and you think holds real promise for the future?
So the most exciting thing for me, and we are actively looking at right now, it's the layer 2 on Ethereum. I think if we have another bull run, especially on altcoins, I think we will see a tremendous flow from the layer 1 to the layer 2s. So that's going to be layer 2 on Ethereum, like Polygon or all the other ones, and that's going to be obviously the Lightning Network on Bitcoin. This is the one thing we are looking at, because we think that this is the last piece of the puzzle, protocol wise, to be ticked until we can switch to building real products. On the technological side at FlowDesk, we have obviously other challenges, and we are just scaling our infrastructure and our tech with the latest cloud technologies to onboard new exchanges, use private internet to lower our latencies, and at the end of the day, give the best single product, as you mentioned, one-stop shop for all investors is our ultimate goal. But obviously that will take months and resources to build.
Okay, brilliant. Guilhem, thank you so much for joining us today. It's been fascinating to hear about your progress. Congratulations to you and the team again on receiving your regulatory authorization in France, and wishing you all the best of luck in the coming months and years. Thanks for
Thank you
joining us.
so much. Thank you so much.